Hi guys, good afternoon. It's Sunday, 10th of November 2019. Jay Lakhani here, Chief Market Strategist at bindalFX. Trading mastery is a child's play. A, if you've got a good trading system, and B, if you follow it with discipline. In this video tutorial, I would like to go through some of the trading journals I've got from members and basically act as a tutorial on how to get low risk, high probability trades. Okay, just a quick risk warning. It should be understood that currency trading involves high risk and you can lose a lot of money if you don't know what you're doing. As you will see, most broker websites show that a very high percentage of retail traders do lose a lot of money. Before I go into the tutorial, just a mention, if you haven't read this book, Develop a Winning Attitude, you can download it free of charge from our website. And it's www.forexmentor.net/ebook.php. If you go on our homepage, you will be able to see a link to download this book. Okay, here I'm going through some trading journals which I've got from members. And one of the things with success in trading is you got to get in at the right time. Okay, now in this particular case, the trader is going long. Now one of the thing is that you should never go long on a red candle. Okay, here if we look at it, is this is a very nice 1 2 3. That's your 1 2 3. You get a break of the 2 to 3 line, right? And the prices at this stage are above the trigger line, and the trigger line at this stage is green. Obviously subsequently it becomes red. Now, one of the things here is this is a 5-minute chart, and what you're really seeing is that the ribbon are sloping downwards. So for one to go long, it is absolutely essential that the system is followed with great discipline. You have a break of the 2 to 3 line, which is fine, and this is a very long candle. Now generally if you have a long candle, what you want to do is you want to wait for a pullback. In this case, trader gets into the trade before the candle close. Obviously subsequently you see a very big red candle, and what you see here is a railway track. Okay, this is a good example of a railway track, and the ribbons are still sloping downwards. The trader exits at this point. Okay, now generally stops has to be placed. In this case, it's a it's a long trade, so either at point 1, this is your point 1, 2, and 3, right, or below the point 3. So this is a very good pullback. So stops should be here. So even though the entry was wrong, but supposing if the stops were to be placed just below the support here, or in this case the trade probably exited, so the trader exited in this case and taking a 350 pound loss. So obviously the key point is you got to give the trade a chance to work in your favor or to work against it. Yeah, The other thing here is that the trade has done 5 lots. Obviously, in this case, the trading equity was £2,500. So doing 5 lots is a very big trade size. Okay, so certainly shouldn't have been trading big lots. Naturally, with a small account size and trading 5 lots, when you end up with £350 loss, that is a very large percentage of your equity, nearly 15 to 20%. So you know, to lose that on one trade is a lot of money. So learning point here is A, you should be looking to cut on the trade size. B, you should be patiently waiting for a perfect low risk, high probability trade. Never go long on a red candle, and never go short on a green candle. For you to go long, obviously the ribbon must be pointing upwards. So this is a very good example. At this stage, the ribbon are sloping up. Here you can see the ribbon and the trigger line are exactly at the same place, and they are sloping up. I don't have any big candles at this stage. You know, like here you got big green candles. That's a very big candle. If you're able to get in on this candle for the long trade, you should be able to get your TP1 here, and then the TP2 would have been stopped out, right? So even then, that would have been at a profit, yeah. So this is a good place to have gotten long. Also, this is a very good place, yeah. Here the prices did move very fast, and one thing what you don't want to do is to chase long candles there. This is another trade example here again. Entries here for the long, yeah. Again, the entry, it's far away from the trigger line. The entry is taken on a red candle. Okay, there isn't enough pullback. Find the ribbon is sloping up, which is good, but you know, chasing long candles, one should really wait for a big enough pullback. Could have taken a trade here on this candle. So if one takes a long trade here, your stops will be just around at this point below the previous low. So it becomes a low risk because your stops are low. Okay. So in this case, exit was there. Now, because it was a wrong entry, again, nearly £400 loss, 5 lots taken. As I say, same argument as before, is one shouldn't be taking, you know, 5 lots on a 2,500 account. Yeah. Naturally, if the entry was right, so for example, on this candle here, as soon as it closed, one could have taken a trade there, right? Yes, subsequently it went down, but in this case, you would have a slightly better entry, and stops would be at this point, and then subsequently the prices go up, right? The best entries would definitely be here, where the trigger line and the ribbon are all chained together. I don't have any big candles there. It's a nice orderly move. One of the things one should not do is to chase those big candles. As often in Forex, you have false breakout, and often we have sharp pullback and retracement. That's when often we get retail traders get sucked in, And if it doesn't go your way, then you get a quick retracement. Because you got a bad entry, the retracement puts you into a loss. You panic, you come out. As soon as you come out, the prices go in the direction of your trade. Yeah. So again, a learning point here is don't chase big candles. Entry must be perfect, as close to the trigger line as possible. Try to have the ribbon and the trigger all chained together. Do not go for big trade lots. Okay, trade within your means. With a 2,500 account, I would have gone for half a lot or maximum one lot. Okay, you need to take the mini steps. Okay, you don't want to become rich very quickly with this. I've seen many cases where traders do big trade lots and then they quickly lose their capital. I've had many traders who take those mini steps, okay, and with the profit buffer, they start increasing the trade size. Yesterday, I had shown a very good example of how one trader trading gold and going with the flow, adding to the winners all the time. And yes, he did take a large position. And as I had mentioned in that video, he had risked nearly 20% of his equity, of the capital. But he said most of it was a profit buffer. Yeah. So key point is if you've got a profit buffer, fine. Do take big trade sizes. If you haven't, please don't take big trade sizes. Trade within your means. And yes, once you have got momentum going your way, of course, don't let anybody stop you taking big sizes. Don't let anybody tell you it can't be done. But again, the key is you got to follow the system. So imagine supposing a big lot's taken here, the entry is perfect. Look, I mean, you would have banked a lot of pips there. Yeah. So instead of a 400-pound loss, there would have been a 400-pound profit. So key message here is get in at the right time. Okay. If you have missed the move, that's it. You have missed the move. Don't chase the market. The market is there every day. Okay. If you miss a trade, just stand aside. If you miss a trade, stand aside. Don't chase it. Yeah. I hope this video tutorial was helpful to you. Look, guys, if you have benefited from it, feel free to press the like button. Make sure you put some comments. What is it that you want me to do for you? This morning I done a really nice video on self-sabotage. I hope that has helped you. If there's anything that you want me to cover in the future tutorials, feel free to put a comment. If you feel that any of your friends will benefit from this video, feel free to share it. And of course, subscribe to our YouTube channel. Much appreciated. If you haven't read the book Forex Mastery: A Child's Play, you can buy it from Amazon. That's all for me, guys. God bless and happy trading. Goodbye.